Good morning, everyone. Today, I'm going to talk about international capital budgeting. International capital budgeting is the process used by companies to evaluate investment opportunities in other countries. When a company plans to build a factory, open a branch, or invest abroad, it must carefully analyze whether the investment will be profitable. This topic has been very important because globalization has allowed companies to expand beyond their home countries. Businesses invest internationally to reach new customers, reduce production cost, and access better resources. However, international investment involve additional challenges such as exchange rate changes, different tax system, political risk. Therefore, companies use international capital budgeting to make safe and profitable decisions. Features. International capital budgeting focuses on evaluating foreign investment projects. Companies may invest in assets like factories, equipments, or foreign subsidiaries. One important factor is exchange rate fluctuation, which can affect the value of the profits. Company must also consider political and economic conditions in the foreign country. To evaluate investment, firms use financial techniques such as net present value, internal rate of return, and payback period. The process starts by identifying an investment opportunity, estimating future cash inflows, adjusting for risk and exchange rates, and then making decision to accept or reject the project. The process begins with estimating the future cash inflows and outflows from the foreign project. Since the investment is in another country, the cash flows are affected by exchange rates, taxes, and economic condition. After estimating cash flows, they are converted into company's home currency. Then, financial techniques such as net present value are used to evaluate the profitability of the investment. If the net present value of future returns is greater than the initial investment, the project is considered profitable. This helps companies select the best investment options and avoid financial losses. International capital budgeting is widely used by multinational companies in real-world situations. For example, Indian companies invest in foreign countries to expand their global presence. Tata Motors acquired Jaguar Land Rover to enter the international luxury car market. Before making this investment, the company carefully evaluated cost, risk, and expected return. Similarly, companies like Apple have invested in manufacturing units in India. Before investing, Apple analyzed the cost of production, expected profit, and currency risk. This example shows how companies use international capital budgeting to make informed and profitable investment decisions. International capital budgeting provides several benefits. It helps companies expand their business globally and increase profit. It also ensures proper use of financial resources by selecting the best investment opportunities. However, there are some limitations. Exchange rate changes can affect profit. Political and economic instability in foreign countries can create risk. Also, predicting future cash flows accurately can be difficult. Despite these challenges, it remains an essential tool for international capital budgeting. To conclude, international capital budgeting plays a very important role in helping companies evaluate foreign investment opportunity. It allows business to analyze return, risk, and financial feasibility before investing. It helps companies reduce risk and make profitable long-term investment decisions. As globalization continues to grow, international capital budgeting will remain essential for multinational companies.